I found why the stock market hasn't crashed yet. The stock market just hit a new all-time high, and I know what you're thinking. This doesn't make sense. We have a massive debt, global tension, inflation that refuses to go away, and yet the market is still going up. So the real question is, why hasn't it crashed yet? Because if you're paying attention, something feels off, and almost like it should have already happened. But it did not. And that's where things get interesting. Because this is the part most people completely misunderstand. The market is not supposed to make sense, and it's supposed to confuse you. And if you're confused right now, you're not behind. You're exactly where most people are. But here's the difference. Most people stop there. They assume it's random, or it's rigged, or impossible to understand. But it's not. There is a system, and once you see it, you cannot unsee it. So point number one, what people are missing right now. Most people think the markets are disconnected from reality, or are manipulated, or are completely broken. And honestly, that feeling is real. Because everything around you is telling you that there is something wrong. But here's the truth. The market is not reacting to any headlines. It's reacting to structure. And that changes everything. Because structure is invisible. You don't see it, but it controls everything. And right now, that structure is holding up the market. Barely, but it's holding up. That's force number one. That brings us to our point number one, the Fed safety net. Let's start with the first force, the belief that the Fed will step in. I mean, it's not guaranteed, but it is expected, and that is the expectation, is enough to change the behavior of the market. Every time the market drops, people hesitate. They don't panic. They wait, and then they buy. Because deep down, they believe that someone will step in, and here's the part that should make you pause, which is the belief. It's always been rewarded every single time since 2008. The system saved back at that time and also back in 2020. There was an infusion of massive liquidity. The markets recovered fast. So now, there is no longer hope. It's all about conditioning and conditioned behavior. It is powerful. But here it's where it gets all uncomfortable. What happens when the Fed can't step in? Because if inflation rises, they're stuck. They can't cut rates and they can't inject liquidity freely and suddenly. And that safety net then disappears. And if that belief breaks, the reaction will be fast. That brings us to force number two, the passive money machine. Now this one is happening quietly. Every single day, millions of people get paid, and without thinking, money flows into the market. Automatically, there is no decision making, no timing, just constant buying inside the market. And this is important because it means the market is being supported when people are scared at the same time. So even when headlines are negative, the machines keep going. Think about that. Even during sell-offs, there's still money entering. And that's why the dips feel shorter. That's why recoveries feel faster, because there's always a buyer. But here's the part that no one wants to talk about. This only works if people keep earning. If jobs disappear, this slows down. And if it slows down enough, it flips. And when it flips, the support becomes the pressure. And that's when things change. Which brings us to force number three, the algorithm engine. Now let's talk about something. Most people underestimate the market is no longer human. A huge part of it is automated. And these systems don't think. They react. If the market goes up, they buy. If it goes down, they sell. And that creates momentum. And here is the twist. When selling happens, it happens fast, but it also finishes fast. Because once they sell, there's nothing left. And when the market stabilizes, they flip and start buying aggressively. And this creates those sharp recoveries that confuses everyone. But here's the emotional part. This is where people feel the market is rigged because it moves so fast, too sharp, too mechanical. But it is not manipulation. It is automation. And automation doesn't care about your feelings, which brings us to force number four, the hidden mechanism. Now this is the one where most people never see. And once you understand it, everything clicks. The options market, there are institutions that are constantly adjusting. To stay balanced, they don't want risk. So when the market drops, they're forced to buy, not by choice, by design. And when markets rise, they sell, which creates the balance. It smooths everything out, so when the panic hits, there is invisible buying going on, holding things together. And this is the moment where most people miss out. So basically, you're watching fear, but underneath, there is a forced stability. Now think about all the four forces that I spoke about, working together: the Fed support, the passive inflows, the algorithm reactions, and the hidden buying. That's not random, that is a system. And systems don't break easily, but they do break, and when they do, it's fast. So which brings me to the point, what actually breaks the market? Now this is the part you need to pay attention to, because this is where everything flips. First, the interest rates. If they rise high enough, stocks lose their edge. Money moves and pressure builds. Second, inflation. If it stays high, the Fed loses control. And without the Fed, the system weakens. Third, concentration. Too much weight in too few companies. If they fall, everything follows. And now, the real one, the unpredictable, a shock. Something that no one expects. And that's how market breaks. Not slowly, but suddenly and quickly. Now, moving over to the final shift. And this is where the truth lies. The market hasn't crashed. Not because nothing is wrong, but because something is still holding it together. And most people don't even know what that is. And that's where the opportunity lies. Because when you understand the system, you stop reacting. You start preparing. Now, if you're thinking, okay, what should I actually do? That's exactly what I break down on Finance with Bera, where I show you my portfolio, my decision making, and how I'm positioning myself at this time. Because at the end of the day, it's not about predicting, it's about being ready. And most people only react after it's too late.